Welcome to our channel, Bisu this side. Today we are going to discuss about the accounts payable interview questions related to your Oracle e-business suite as well as your cloud system, right? It belongs to both of the ERPs. So similarity kind of a question you can expect in the interviews, okay? So let us see the questionnaire, all these, which, particularly for the accounts payable module I have collected. It's close to 60 plus pages. I can take up today maximum number of questions and answers and try to explain here, okay. Let us see how much we can cover or we'll cover in the next session, okay. Explain about the accounts payable module. Well, the accounts payable application, it's particularly records the vendor accounting management kind of the system. It also integral part of the purchasing system where you have got the deliveries and the invoices are being managed according to the vendors actually. So what happens is that this particular accounts payable module, it involves the vendor processing entire, starting with your supplier invoice, supplier payment, particularly these two business process we handle within the accounts payable module. However, in purchasing module, we handle the purchase order, then we do the requisitions and all those kind of receipts, everything we do in the purchasing order module. Then after that, finally send it to the accounts payable module where we record all these supplier invoices and payments. And afterwards, the same has been transferred to the cash management system application, whereas we do the with the bank statement, we are going to reconcile the vendor payments, right? What is the meaning of an invoice? Well, as in the layman's language, it's more of like a invoice is being generated that normally we purchase something, some kind of a goods, or we procure some kind of a goods, or we get some kind of a services from a particular vendor or a particular supplier. So in that context, a supplier raise a invoice to us. Against that invoice, you'll have to pay back to the supplier. So that is the meaning of an invoice. You will have a commercial paper or a document, whereas the seller is going to provide you a invoice, particularly where you do the invoicing, supplier invoicing, and pay back to the particular vendor, okay. Can you give me a sample process flow of the procure to pay cycle? Yes, the procure to pay cycle, we say P2P. It involves the two department. One is your commercial department, and then we have a finance department. Both the department involves in this particular business process flow. The first one is procurement, right? You will have to, the commercial department follows these steps involved in order to procure any kind of items or services, right? They first of all receive the requisition from the concerned department, like the HR, admin, or any other department. They just get the requisitions from there, and finally they request for a quotation from the supplier, and base minimum three suppliers quotation, they are going to finalize which supplier they are going to issue the purchase order, right? And after that, they finalize the best quotation by keeping in mind about all the company standards, and if they have budget, right, for the same, they'll have to figure it out, the budget is matching as per the requirement and the all other terms and conditions. Then they go for it and negotiate with the supplier for more economic pricing and finalize the payment terms, and finally they process the purchase order and forward it to the supplier for the supply of goods or services. And the pay cycle, this is procure cycle, this is the pay cycle happens, it happens to be in the finance department in particular. The following step needs to be fulfilled: invoice should match with the PO, right, in the finance department. Then invoice should has all the supporting documents such as the PO copy, delivery note, we say, more of like it's a GRN note, right? It is duly signed by the receiver, um, duly signed by the receiver, basically the staff who authorized to sign the goods receipt note, or the storekeeper, right? So if the invoice is for the services, then it should be forwarded to the concerned department head and the project managers for his confirmation of the work being done, and his approval has to be taken care of, right? Even if it is not the service invoice, it should be forwarded to the concerned person's approval who requested PO for the same. After that, finance can reject the invoice if it is not budgeted or asked for any other reason. So if there is no budget has been done, then finance has got the every right to reject that particular purchase order, right? And Next is if the budget is, the budget is there and it fulfills all other terms and condition, the process, right, all the particular and the particular invoices from the supplier based upon the purchase order, the goods receipt note, everything is done, right. So after receiving all the confirmation and approval from the concerned department, head of the invoice will be get updated to the accounting system first of all, in order to avoid any duplication of the invoice and PO. It is shown on the accounting package. If the invoice is duplicate, if not, at least it tells you the PO is already exist, or already used or cancelled. So in ERP system, it's very good, information that if the PO has got, the invoice has not been processed against the PO, it will have a available limit. You can apply that particular invoice to a PO. If it is already a paid, means system will, there will be no blank, in amount in terms of, available amount in terms of the PO which is available, that you can able to match your invoice against that PO. So system will throw error out of it, right. So that there is no chance of making a duplicacy. System stops there itself, right. And finance approve the invoice and process the payments based upon the payment terms with the supplier. Okay. So what are the journal entries of procure to pay cycle? Let us see. First of all, in the PO creation, you'll have no entry, right? While receiving the goods, it will be more of like the material receiving account debited to your AP accrual account. Okay, AP accrual account. Fine. The next one is C. While doing an inspection, there will be no entry will be generated out of the inspection. However, while transaction being, while transfer the goods to the goods and inventory, while trans no while okay, while transferring the, okay, so while transferring the goods to the inventory, it will be more of like inventory or material to the material receiving account. Okay. Okay, so the next one is the procure to pay cycle accounting entries. You'll have purchase order. At the time of initiation of a purchase order, system will create no accounting entry whatsoever. Okay. Next is system creates the accounting entry when it will be only when you receive the goods at your company, at your wherever you receive the goods, at the factory, or at the, we say the godam, or we can say the store, at wherever you receive the goods, right. So the accounting entry stands like this: receiving inventory to the AP accrual account. When you'll have the delivery, it will be have material valuation account debited to your receiving inventory account. Then at the time of doing the invoice, particularly, you'll have AP accrual account debited to the AP liability account. And whenever we make the payment, it will be more of like AP liability to your cash clearing account. And the moment we do the bank reconciliation, once the payment has been cleared from the bank, it will be more of like cash clearing to the cash account. Okay. Let us see what is next. We'll have what is the difference in between of EFT and a wire payment. Basically, EFT stands within the own country itself. Wire is more of like an international payment, right? For EFT, definitely you can initiate a, from the payment process profile, you can initiate a batch payment, having your provided your supplier bank account. You can run the batch payment. It will transmit a file to the bank, and finally the bank will probably do the payment for the whatever vendors you have provided for the EFT instruction payment, right. For a wire, what happens if you do a, international payment, right, it has to go through the proper channel actually. So normally for wire payment, we can do still a, online integration with the bank on the wire side still, but most of the company, they prefers, if they are making any kind of a, international payment, they normally create RTGS kind of a document where they sign it, because the amount will be huge amount like in dollars or something. So they'll be sending that document, whatever duly signed document, for the wire transfer to the bank offline. It can be done online, there is no harm in that, but normally people, I mean, I have seen in the companies they make it more of like a manual process for the wire payment, which are more of like a international payments, right? So this is a difference in between a wire, I mean EFT and a wire payment. What do you mean by distribution set? What happens is that you have a CCID combination set, right? A CCID combination set, nothing but it's more of like expenses account set. So say for example you have four segment structure in any kind of chart of account structural base. You have company, department, account, and product. So you have to go and manually key in all the values within the segmental structure of chart of account, right? All the segment has to be provided manually. Now for some of the users, say for example users have been requested, no, for office expenses why don't you create some kind of office expenses kind of a definition, so that we can easily go and select that particular, and by default it will pick those code combinations. So basically in order to say distribution set, provide a more of like office expenses, rent expenses, these kind of values in terms of the system, rather than you provide a accounting code combination set. Okay, this will ease probably the workload from an employee perspective. From a user perspective, they simply go, they figure it out, okay, rent expenses, select it from the distribution set and provide it. Simply it will pick your code combination set. Okay, so that's called your distribution set. What do you mean by a GRN? Basically, a GRN nothing but it's a goods receipt note. We say normally the stores department, they receive the goods from the supplier, right? So it's more of like the proof of material that you received this material at the warehouse. Okay, and finally when you receive, you'll have to figure it out how much has been received quantity. So against that purchase order, say for example you have 100 ordered quantity and you have received only 60 out of it, so you'll have to provide 60 as a received quantity. So in GRN particularly, that is going to contain your order quantity as far as your PO is concerned, what is total order, and it will show the 100, say for example received is 60. And if you want to return anything back to the supplier which is not of a good quantity, or not of in a good quality, right, you want to return, you can do so at that point of time itself. So that's the meaning of a GRN. You receive the goods and update based upon this GRN, like the as per the PO, you'll have to update how many items you have received at the warehouse or the store department, right? So that's the meaning of GRN. How does the payment mechanism work actually? Yeah, this is very important question. Basically as I say, in a vendor invoices, once the vendor invoices has been processed, it will be more of like a open supplier open invoices will be. And whenever you run a batch payment, right, it will pick all the open invoices based upon the due date actually. So say for example, as on today, if I run a batch payment and the due date as on today, whatever the invoices due falls due as on today, it will pick all those invoices for payment. And the moment you pay it off to the vendor, right, you run a EFT or batch payment, right, kind of a program, then it initiate the file, transmit the file to the bank, and finally bank sends all this payment to the vendor. So that is how your entire payment mechanism work actually. Okay, so normally company will have two types of accounts. One is your current account, and there will be a zero clearing account also for the accounts payable. All big companies, right? I've seen many companies in US, Europe, they'll be maintaining a zero clearing account for the AP, where there will be only say for example in this week I want to have a payment of $1 lakh for all these vendors. Then only I'll transfer from my other current account to this clearing account $1 lakh, and from here I'm going to pay it off to the vendors, right? So that also you can add up in your interview questions related information if they ask about zero clearing account details. The difference between interface table and a base table. So base table, I would say whenever the transaction gets already recorded finally into the system, that is called base table. And interface is nothing but it is in the intermediate level that has not been transferred to the base table, it is in the intermediate level. Okay, in the interface table, however, you can able to delete the data, but in base table you will be not able to delete the data from the system. Anything you want to do within the interface table, it is good to go, you can do so. You can integrate any kind of data from third party system or within the Oracle system, right? You can bring it to the interface table and you can see as per your wish. You can see, okay, this data holds good or fair. You can able to make it post to the base table, you can do so. If you find it some kind of a fault is there, you can definitely extract the interface table and do the edit in the interface table, and then finally you can able to post it to the base table. So what are the base tables in AP? You'll have AP invoice all, AP invoice payments all, AP invoice distributions all, AP payment schedule, AP payment distributions all, AP checks all. So these are the various tables you'll have under the AP accounts payable. This is AP accounting events all, AP bank accounts all, AP bank accounts users all. Okay. So let us see what are the process of creating invoice and transferring to the GL. So first of all, you can definitely create a batch of invoice within the system through the PDI file or through the manually also you can able to create, and finally you can save those invoices. Then finally you can post this invoice after your validation program. So once all this done, right, once the validation is done, you can able to run the create accounting transfer program to the GL. Okay. So the moment you can transfer it to the GL, you have an option, right? Whether you can want to transfer to the GL with post or unposted journal. You can always choose the posting one, and so then after, if you run that create accounting program, the data will get transferred from your payables to the general ledger applications, and finally in the GL balances, the accounting will reflect in the GL. You can go and check your definitions. Thank you. How many types of invoices are there in accounts payable? Basically, as you can see, there will be standard invoice, there will be debit memo, credit memo, mixed invoice, retainage invoice, transportation invoice, prepayment invoice, expenses report invoice, and payment request invoice, and there will be PO default. So these are basically related to your EBS, but in cloud, these are not many, available within the, invoices. Domain, I would say there are five or six maximum: standard, debit memo, credit memo, and PO default. Then you'll have all these invoices will be reflecting based upon the configuration of each module, because the module expansion has been done in the cloud space. In EBS earlier it was not there, and therefore in the EBS you can able to see a lot of type of invoices are there. Okay. How many types of purchase order are there, agreement are there? Okay. So there are normally four types of purchase order, as you can see over here. There will be standard purchase order. Okay. There will be planned purchase order, there will be contract one, and there will be a blanket purchase order. Let us see what are these this different types of having this purchase order, the definition, and why they are used for different purposes actually. Okay. The first one is the standard purchase order. You generally create the standard purchase order for one-time purchase of the various items. You create the standard purchase order when you know the details of the goods or the services which the organization require. The estimated cost out of it and the quantities, delivery schedule, everything will be there, and the accounting distribution also. If you use the encumbrance accounting, the purchase order may be encumbrances since the required information is known. Okay. So this is all about standard purchase order. Let us see the second one. There will be planned purchase order. Normally, a planned purchase order is a long-term agreement in between the organization and the vendor to buy a specific item or services from a single source. So it has to be must be having a tentative delivery schedule, and all the details of the goods and services has to be there, which the organization wants to procure. And the purchase order, planned purchase order, which will be including the charge account, the quantities, and the estimated cost. Okay. So for example, you are buying goods for Christmas, for a specific dealer, so there could be a number of items that you want to buy, right? So there you can define a planned purchase order with a particular vendor. Next is contract purchase order. Let us see. You can create a contract purchase order agreement with your supplier to agree on a specific terms and condition without indicating the goods and services that you will be purchasing. That is, for a dollar amount, you must supply this much of quantity. Okay. You can issue. You can later issue a standard purchase order referencing your contract, and you can encumbrance this purchase order if you use the encumbrance accounting. Fine. Next is the blanket PO. So blanket PO is basically you create a blanket purchase agreement when you know that the details of the goods and services you plan to buy from a specific supplier for a period of time, but you do not know when this details of this delivery schedule or etc. You can use this blanket purchase agreement to specify negotiated prices for your items before actually purchasing them. A blanket purchase agreement is a sort of contract in between you and your supplier about the price at which you'll purchase the items from a specific supplier in future. Here you enter the price of the item, not the quantity of the items. When you create the release, you enter the quantity of the items, right? The price is not updatable in the release. The quantity, however, based upon the requirement multiplied by the price makes it the released amount. Now, suppose your contract with your supplier is such that you can only purchase the items with a fixed amount against that particular contract. Okay. So, as you can see, there are four types of POs which we have discussed so far. Let us see. The next question will be the payment method. So, what kind of a payment method normally, as far as the Oracle ERP is concerned? It's more of like a fund disbursement. A payment method is a medium by which the first party payer or deploying company makes payment to the third party, which is called a pay, such as supplier. You can use a payment method to one or more supplier. Oracle Payment supports several payment method for the funds disbursement. Include which is the following: check, electronic, wire, and clearing. Okay, basically these are different types of payment methods which are available for organization within the ERP application of Oracle. Be it your any kind of a ERP, right? You will have this check, electronic, wire, and clearing. So check, as you know, this is the old method of a dynamic payment, which where normally an organization pays through by a check to the vendor. Okay. Electronic is nothing but it's EFT kind of a transfer, which makes the organization, provided the supply bank account details and they, all sort of details, which makes enable them, to make a EFT payment to the vendor. And wire is more of like being used for the international kind of a payment, right? If you are based out in India, say for example your organization is, and you want to pay to a vendor which is based out in Dubai or China or any other country out of India, so in that context we can use this wire method of payment. Okay. Next one is the clearing one. Basically, clearing payment is nothing but it's an intercompany transaction within two, sister organization, right? So that's the reason we use this clearing kind of a payment. It's not for the vendor payment. What is the recurring invoice and what are the AP setup steps particularly? So recurring invoice is more of like sometimes the suppliers would not be sending any kind of invoice, but still the payment have to be made to the home, basically the rent, the lease rentals, right? In this situation, we have to create an invoice every period wise. For that purpose, we have to create one recurring invoice template, and template means one of the master copy creating the multiple invoices is called the templates. Here we are creating the one invoice master copy, which is formally known as recurring invoice or the recurring invoice template. So basically, what are the setups you need to do, in order to get a recurring invoice, right? Let us see that. We have to create one specific calendar, special calendar for that recurring invoice. We have to create one full distribution set, and we have to enter the payment terms in the recurring invoice window and enter the template no template number, then the first invoice amount and special invoice amount. So there are four things you will have to apply for this recurring invoice setup: the special calendar, the distribution set you will have to define. The third is the recurring payment terms for the recurring invoice, the fourth one is template number with the what is the invoice amount, right? Okay. Okay, go down to the next question, which is more of like there'll be types of various matching option within the purchase order to the accounts payable. We'll have two-way, three-way, and four-way. So two-way is nothing but invoice matching to the purchase order, where the quantity billed versus the quantity order on the shipment line versus the invoice unit price against the purchase order line. Normally what happens is that in two-way, just go down and match your invoice against the PO. That's all we need to do in the two-way. Three-way, definitely there is a receipt invoice against the purchase order. You'll have a receipt, right? So how much quantity has been received against that particular purchase order, it has to be receipt has to be done. And while doing invoice, you need to ensure that against that invoice, the purchase order and receipt has to be matched against for the three-way. And four ways, nothing but additional comes into the picture, which is the inspection one. Your four ways purchase order, receipt, and inspection. Whenever you do an invoice against, doing four-way matching, you need to ensure all the things has been done. Your purchase order, your receipt, and your inspection has been done prior to that. Okay. How many types of hold we have into the system? Basically, we will have two types of holds: system hold and a manual hold. Basically, system hold is something that you cannot release it without any kind of manual intervention, because system holds are more of like, if anything, as per, not as per the system parameters, right? System put that invoice into the hold. Say for example, you have a tax mismatch or quantity mismatch or PO amount or invoice amount is not matching. So in that case, it will go down to a system hold. Once you clear the system hold, I mean fix the issues, whatever issues it is showing in the system, it will automatically release that particular hold. Manual hold, it's a manual hold. Basically, a user can put on to an invoice and they can release based upon their requirement. If all parameters have been met, right, they can release this hold and do the payment to the invoice. Can you release manual hold? If yes, how? Yes, we can release hold, manual holds. That is possible. How many ways you can pay the invoice amount? We can have a three-way. So apply in full, schedule payment, and installment. So three-way you can make the payment of that particular invoices. Okay. What is the difference in between debit and credit memo? Basically, debit memo will raise to the customer, and credit memo will raise to the vendor. Okay. Can you create a duplicate vendor? It's not possible. Creation of the duplicate vendor. Vendor numbers will be generated automatically or manually. Yes, system has both the option. If you have chosen automatic, you can't create the manual one. But if you choose manual and automatic, yes, it is possible. You can provide your manual number while creating your supplier as well. Okay. How many types of key flexibles are there in payables? In payables, basically there will be no key flexibility in PO or AP. Okay, and in other modules we have different types of flexibility. What are the payment terms actually? Yeah, payment terms basically it is going to determine what will be your due date for the payments after you receive your invoices, right? It could be your immediate, it could be your net 30, net 15, based upon your payment terms provided for the supplier. So based upon this payment term, normally the invoices will be due whenever you run the batch payment. System is going to pick that particular payment terms, and based on that it is going to pick those invoices which are due for payment. Okay. What are the different types of payment method as you discussed just now? Check, electronic, wire, and clearing. Check is more of like a manual method, and electronic is the EFT. Wire is international payment, and clearing is basically a intercompany related transfer. Okay.